Hello, ladies and gentlemen. My name is Greg Mikulowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at the euro versus US dollar. It is a bit lower in trading here today. Not much, but we were higher and have come off that high level. Let's start by taking a look at the daily chart. And if we look at the daily chart, the last 5 trading days have seen the price move above and below the green line that represents a 200-day moving average. And what does that say to me? That says that the market is unsure of which way it wants to go. Does it want to go to the upside or want to go to the downside? And what helped that decision was yesterday's move to the upside. The buyers had their shot. They took the price above the high price from November, traded the highest level since going back here to June, end of June here, so a number of months. But we couldn't get above the 50% midpoint of the move down from the 2022 high that was reached in January to the low that we saw in September. The inability to get to the 50% midpoint is always it's a level that I like to look at as sort of the a tilting point for a currency pair from a technical perspective. Not being able to get above that, we got within about 21 pips of it. Was a disappointment, and we're seeing the rotation back to the downside here today. Well, actually, we saw it yesterday where the price moved all the way down and closed below that 200-day moving average. And in trading here today, we had a small move above the level before rotating back to the downside, making new lows here, going back to last week's trading. So bit of a disappointment and a bit of a shift in the bias on the daily chart below the 200-day moving average. More bearish from that perspective. Now let's take a look at the hourly chart. And we see on the hourly chart in trading here today is a reluctance to move back above the 100-hour moving average. We broke below that level, actually, and a couple times yesterday. First in the Asian session, we moved below the 100 and then shot all the way up, made our new high, failed up there, and then rotated back down, trading back below that 100-hour moving average. And trading here today, the market moved up toward that 100-hour moving average. And although we did inch a little bit above that line, as you can probably see here, the market could not sustain any sort of momentum above that level, and we saw the price start to move back to the downside. Now, for most of for part of the morning session, the price traded in between the 100-hour moving average above and the 200-hour moving average below, and then we moved below, and we started to see more selling pressure here. But we did get a bounce back higher, back above the 200, but we stay below this other green line, which is our 200-day moving average. Really, this whole cluster of moving averages right here is of importance for this currency pair. And the inability to get above the 200-day moving average, well, maybe tilted the bias back to the downside, kept the bias in the downside direction, and we have since moved back below the 200-hour moving average. So the sellers are making a play. Okay, now the play has been somewhat limited. We haven't made a new low in trading here today in the afternoon session, so that is a issue for the traders. And as long as the price can remain below the 200-hour moving average, we'll give the benefit of the doubt to the sellers. We have to give the benefit of the doubt to the sellers that they're more in control, at least in the short term here. So as long as that can happen, we want to look below, trade to new lows, and then start to move toward this area right here. If we break below that level, we'll open the door for further selling. Now, this area right here, this yellow area right here, as you can see, is home to a number of different levels through here. Swing low, swing low, swing low, swing high, swing high. And then we moved above it here, and we found support against it here. So that's going to be a level that we're going to be paying attention to on the downside between 102.73 and 102.92 if we're able to get below the low price from earlier today. So that's the plan here for the sellers. Now, for you dip buyers, if you like the price here, what you need to do is, and maybe a better trade would be to buy if the price moves back above the 200 and hope that if had enough of the selling down here, where the sellers have failed and move back above that 200-hour moving average, move above the 200-day, move above the 100-hour moving average, open the door for further upside momentum. If you blur your eyes and take a look at the range here, we have been in a trading range for a number of weeks now, and the price moved higher, moved lower, moved higher, and now below the moving averages. So it's tilting a little bit more to the downside. But we must also understand that there is lots of ups and downs here as the market tries to decide what it wants to do. One of the things that the market is struggling with is the ECB rate decision, which will take place in the mid part of December. I think it's December 15th. I know it's December 15th. And at that point, at that time, they're going to be deciding whether it's 50 or 75 basis points. What the market is pricing in around 63 basis points, right in between those two levels. So it's going to be a key level, one of those levels where traders are going to have an opportunity to either see the price move sharply to the upside or sharply move to the downside. So there you have it, a detailed look of the euro versus US dollar. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.